Let's talk some housing and first-time home buyers. Tian Liu is back with us, chief economist at Genworth Mortgage Insurance. And Tian, you have a really good report, as always, an important update at a time where housing just keeps going. Is there any sign of slowing in this momentum, Tian?
Hi, Oliver. How are you? Thanks for having me on the show again. I think housing is actually in a really good place right now. I think there are a couple of reasons here. One is, I think you mentioned to your other guests earlier that interest rate is at a near record low. So that helps a lot the affordability. I think the second reason is that a lot of people want to get back to normal. If you look at our charts in the first-time home buyer report, we showed that the states that did the worst between March and April actually rebounded fastest, between May and July. So people really want to get back to normal. I think the other thing that's supporting the first-time home buyer report is that the mortgage industry and the mortgage insurance industry in particular has done a very good job in terms of keeping the credit availability strong during the last quarter. And if you think about the hurdles that we faced, a pandemic that stopped people from buying and selling homes, worsening economic environment that a lot of questions on credit risk, and also record volume in terms of refinance that took a lot of capacity away, and also large volume of calls for forbearance. So those are some of the hurdles facing the mortgage industry. I think the mortgage industry has done very, very well, coming out of this recession, and that's because if you look at the number of jobs lost, the industry was very successful in terms of transitioning people from working in the office environment to working working from home. And the real estate industry in general has done very creative things in terms of enabling people buying and selling without actually visiting home physically. So those are some important changes. If you look at the credit availability, the foundation of the housing finance system, the Fannie Mae and Freddie Mac, I think, played a very, very important role in terms of keeping credit availability high. If you look at the mortgage insurance, the low down payment mortgage insurance industry played a very important role. If you look at the percentage of homes going to first-time home buyers, it actually went up in the second quarter from about 80% to 83%. So that's happening during a pandemic. So I think that's a very, very positive sign for the housing finance system and for the wider housing market. I think the last thing is that we think very importantly is that people are looking for ways to buy, and people are also rethinking, what their needs are. And I think that's why you are seeing a lot of repeat buyers coming back in June and July. And that's a very, very significant market because it adds a lot of liquidity, adds a lot of inventory in the housing market. So I think that's a very, very important sign for the housing market, that people are ready to move. They are reassessing their needs. They don't have to go to offices anymore. They need to use their homes as gyms, as classrooms, as offices. I think those are very, very important reasons for rethinking about your housing needs. I think your previous guest talked about the changes in the kind of homes that home builders are producing. I think that's really the industry's response in terms of meeting the new needs of home buyers. So it's really a good time to be in the housing industry right now. It's good to be a home builder. It's good to be a supplier to home builders. If you look at the lumber price, it's going through the roof. It's good to be employees, because construction workers are highly in demand right now.
Tian, so it's single-family homes, but with multi-purpose. As you point out,
right.
Gyms, offices, workstations. I want to just run back again a few of these charts. The first-time home buyer mix continues to climb. I think what's really important from this chart, we'll look at it one more time. I've already had it up a few times, but this goes back several years. Your chart goes back to 2012. And I think what's telling here is that there's no real change in this trend, right? So the fact that, we've had this continuity suggests that it's, there is this kind of COVID-specific need for a new home, but in terms of who's buying them, this has been on the gradual incline for some time, which suggests that we are still trending higher, and there's not some necessary snapback lower, as we leave quarantine or something. People are going to go, oh, I got to move back to the city. No, this has been a trend for first-time home buyers for several years, according to this chart.
That's right. I think one of the least reported facts in the housing market in the last 3 or 4 years is that the housing recovery between 2014 and today is really largely driven by that first-time home buyer segment. That's a very different from back to 2006, 2005, 2006, where a lot of the home buyers are speculators, are investors, and second home buyers, and so it's a very, very different mix of home buyers, and I think that's important to understand for the housing market as a whole. Who is buying and why are they buying?
Are there complications with the way they're buying at all, Tian? I mean, is there? I know that folks that were around in 08 remember that it was a big red flag when everybody was buying homes, but they were buying like multiple homes. There was a lot of loose lending going on. Right now, it seems a lot of it comes from interest rates. One of the other charts I like that you have is about the down payments. And clearly right now, people are favoring paying back over the long term and the low rate. High down payments as a choice for buying that home looks like it's at an all-time low. The orange here representing the share of people who are choosing to do a high or low down payment. Will there be any complications from this? Is this a much low-risk type of housing boom that we're seeing than 08?
I think if you look at the one of the lessons the industry has learned from the last crisis is that you need more capital in the financial system to make it stronger. Particularly for the kind of stress environment that we're in today. And the industry has done a good job in terms of bringing in more capital, bringing in higher capital standards. If you look at the quality of home buyers, it's very different today, not just more first-time home buyers who want to live in the homes, but also first-time home buyers with a high credit score. So if you look at the credit score that Fannie Mae and Freddie Mac makes, they're around 750 today versus 700 back in 2007. So it's a very different change. And if you look at the features, some of the risky features on mortgages, those have gone away. So today's mortgage market is a lot cleaner. It's a little bit more boring because if you look at the Fannie Mae, Freddie Mac's market share in the market, they went from under 50% to 67% in the second quarter in one quarter. So heavily dominated by the agency market. But those agency loans, they're more likely to be paid back.
Mm-hmm. Okay, so this is a lower risk and a more kind of stable trend for who's buying, lower risk in the style of the way they're buying. Seems the volatility, Tian, is more about where they are buying them. And then the last chart I want to hit with you is just the state-by-state look, where we can see, for the most part, it looks like declines are happening in the Northeast in terms of where the home builders and the first-time home buyers are going. What is your read on whether or not that's sustainable? We see here New York down, Pennsylvania, Vermont, and then some of the other major metropolitan areas.
Right. I don't think New York and Pennsylvania have fully recovered yet. But if you look at the June and July period, I think I have a separate chart for that, showing in terms of the pace of recovery, they're doing much better in terms of the pace of recovery, obviously from a lower base. So I think they have probably a longer recovery to go. We're also looking at, if you look at the unemployment rate, it also tends to be a little bit higher in terms of unemployment rate in the Northeast, and so there is, if you think about that, that's a factor to be taken into account as well.
Tian, love the work you guys do. Always a very good assessment of what's happening in housing. A really important update as we see this be the rock of the recovery so far. Maybe a little transferring of certain types of homes to other ones, but overall a net positive here for housing as a whole. And of course, the home builders. Tian Liu is the chief economist at Genworth Mortgage Insurance. Thanks a lot, Tian. Really good stuff as always.